Good morning and welcome to Building Connections Doral Talks. I'm your host, Betty Gonzalez. And guys, today we have a special episode because today we're celebrating the 1-year anniversary of launching Building Connections Doral Talks. And guess what? And I brought back my very first guest, Kristell Caniquitte. She's an awesome mortgage officer or lender officer. How did you say that? I'm sorry.
It goes so many ways. Mortgage lender, mortgage loan officer.
And guys,
basically, I help with financing homes.
Yes. And guys, she's going to talk to us. You want to stay tuned in for this one because she's going to talk about FHA 203H, which is about renovation after a disaster, condo struggles with the FHA HOA assessment. And lastly, we want to talk about divorce because guys, after people go through struggles because for whatever reasons, they like to hold off. And then she want to touch about that, about the divorces that are going on nationwide, especially right here in Florida. Again, good morning, Kristell. Thank you so much for coming in and celebrating with me. Something that we started together, especially because you motivated me to start this journey. And here we are a year later, still going strong. And that was all thanks to you because you inspired me to do so. Thank you again.
Oh, thank you so much. And I am so honored when you sent the message. I was like, oh my gosh, it's actually been a year. So congratulations to you, Betty, for having had consistency, showing up, evolving, and elevating the way you do your podcast, but also the information that you bring to the community. And I love how specific you are. You really want to educate, collaborate, and in our in-between conversations, you even shared, I'm looking to do this. So it's like it's been a project that you've taken to heart. And a year later, look, you're still doing amazing and growing. So congratulations for being a Doral expert and a professional. So thank you.
Thank you, Kristell. Now, tell us a little bit about FHA 203H. I really don't know all the details, so I'm so happy that you are able and available today so that you can tell our audience a little bit more about that.
Sure, definitely. So an FHA 203 is FHA owner occupied, and there are usually a letter behind it. So a K, 203K, is a renovation loan. So a lot of people know FHA 203Ks or streamline refinance. 203H is for disaster. And I thought today would be great to talk about it, even though maybe Broward or Dade did not really get impacted like the west coast of Florida. You may know friends or family who are looking to either relocate from that coast to the East Coast or from that area to the north, wherever it is, or even relocate from where they are because they are renting and like the disaster area and move a little bit further in that spot. So who knows? But it's knowing that when you are coming from a place that was declared a location of disaster, you have opportunities to either now buy your home 100% financing. Okay.
Oh, so yes. So what do you mean? So because I use the VA, which is 100% financing. But you're saying that if you were in an area that was this declared disaster area, right now, if you need to relocate because of that, you can buy in somewhere else, not necessarily in the same area.
You don't have to. You can.
Okay,
right?
But you don't have to, and then you can finance 100%, and this is through a FHA loan?
Yes. Okay.
So
we'll have to look up that your property, you could have been a tenant, you could have actually owned your home, right? You have 1 year to use that program to do an FHA 100% financing. And that's there's another FHA loan that's $100 down, but those are very specific. That's if it's on FHA list. I'm just kind of giving more of an array now of what FHA offers. And then we also have the opportunity to use FHA plus a renovation loan and tag them together because somebody could also be staying. I'm going to stay here. This is where my job is, right? Because if you relocate, you have to qualify with a new job. So this is not for everyone. It's more of like, okay, I'm coming from, or my area was a disaster and I've always wanted to own a home. Then this is an opportunity because I've saved money, but I may not have all the funds yet. This could be a way for me to, down the street, if there's a place that I can go ahead and purchase 100% financing, or that property, let's say in that same area of disaster, needs some renovations, I can do 100% financing and the renovation loan. So it's a matter of having a conversation. So we're not going to go into the details because it's going to be a case by case. But one thing though, this is not for investor. This is for owner occupant only, because FHA is always owner occupied. Now, someone who currently owns a home and they need to go ahead and buy, they can still do that. So it doesn't have to be for first-time buyers, right? So the FHA is not first-time buyer, it's owner occupied only. But if someone already has an FHA, they cannot buy another FHA. So it's truly an FHA program with a twist, which if you're coming from an area that has been declared disaster and it's on FEMA's website, we can see it is on the map, then you have an opportunity to get financing. Always, if you feel like that might be an option for you, reach out to an expert, reach out to a loan officer. Now, not all lenders will be offering it. The same as most lenders will offer FHA, not all of them do FHA 203K, which is renovation. Not all of them may offer that. So don't get despair by saying, well, this one is not offering. How come Kristell is talking about it? Not all lenders have them because it's a specialty of FHA. So I think it's very important for people to have that awareness, even if you're not currently yourself, because you may meet someone that may have that need. So just wanted to make sure we brought that to, our friends and neighbors from the West Coast. Even though I know we speak to Doral families may know of someone, or they may know someone who's relocating and coming to your area.
No, I mean, this is awesome. I myself did not know about this program. So this is...
I didn't either.
But this is why I love having conversations with professionals, because you can come across information that by the time I get it is old news. But right now, we have the opportunity to present the information for the right people at the right time. Excuse me. And you're saying that you didn't have to be a homeowner to qualify for this. You could have been a renter, but then because you were in an area that was declared a disaster zone, that now you can qualify for the FHA H, FHA 203H, to then qualify for 100% in another location or even in the same location.
Right. So moving to to a new home, or a home that could have been maybe hit by disaster, but you're willing to do repairs to it. So even in those areas where those homes may have had some damages, and you can do 203K. So that gets very detailed because there are dollar amount and those specifications. Now, we're not talking about someone where it's a disaster area, but nothing happened to their home. It has to have been in that disaster area. And depending on the type of financing we're looking for, as far as if it's a refinancing or an actual purchase, it's going to still be underwriting discretion to make sure, this is not someone that everything is perfect and they were in the area, but their home were not impacted. It does have to be someone who basically had to be relocating on move.
Which it was many people.
Yes.
That's many people. And I just wonder how many people does not know, basically because they're in the problem right now. There is a lot happening right now for them. They're not thinking about, what can I find out for this, for that, unless people bring the information to them. So
that's why we have to be the ear for them.
I know, hopefully this message come across somebody that knows somebody that probably needs something. So please share this podcast with somebody that you think might need this info. And then also aside this disaster with Milton and Hurricane Helene that is horrendous, and I feel really, really, really bad for the people that was affected by it. We also have another underlying issue happening right here in our backyard. And it is the whole Florida, but it is mostly concentrated in South Florida. And it is the problem with the condo crisis and some of these assessments that the HOAs are, coming up with for the homeowners. What do you know about this and how this is affecting homeowners now?
So this actually impacted me 2 years ago when my building had to go through the inspection and they were going to have to redo all of the balconies. And the noise was so much. At that time, I was had moved to Florida and I was renting a condo on the beach and in Fort Lauderdale. And the owner of where I was renting had 4 units. And each unit he was asked to spend or invest over, I think it was like $10,000 to $20,000 per unit because of the impact windows, the sliding doors, and then also the assessment. It's like, wait, this is no longer a good return for me. So he started selling those units. But it's also a challenge because it takes 2 years at least. They said it's going to be fixed. fast. Now, that took over 2 years. They started one facade and then they got to my facade a year later. So this is someone who owns multiple units. So you will think that he has the money, but that doesn't mean financially it makes sense for his return. So people starting to sell. But what about the homeowner? Because I do have a friend in that same building who was like hit with a sticker price of like, well, now you're going to have to change all those windows, the assessment. And some of those buildings, as they're doing inspections, that same building they had to redo pillars inside the building. So now you're talking about even more expenses for the homeowners. Homeowners could be the person who's living there, could be the person who keeps it as a second home because of our snowbirds, or investors. Well, some people are trying to sell them, but some can't sell because they can't really go anywhere else because they can't afford. But who's going to pay for it? They have to come out of pocket. Otherwise, guess what? The HOA can still go ahead and put a claim and try to foreclose. And one person did have a foreclosure because he wasn't able to make payments. So in one unit, so much happened. And this did not just start yesterday. This has been going on for over 2 years, but it's happening more and more because they were ahead of the trend of like, let's go ahead and get those inspections done. But if you drive the coast, in many places, you can see they're still going through renovation. So those assessments, they don't always know. They give you a budget, but as you do the repair, something else could come up. And that one friend, she had to get a HELOC, a line of credit. She owned the property free and clear, but she's like herself, I don't make enough money. I mean, a lot of times people buy condos because it's affordable, right? The maintenance may be less, or they don't have a high mortgage on it, because a lot of times in South Florida, you have to buy almost cash when it's a condo because they don't meet the reserve requirements. So now the reserves are starting to be coming up. So when you're coming with $10,000, $15,000 to fix the windows, now your assessments on top of that may go up $500-$600 more, multiplied by 12 months. To some people, it's like, I can't afford this. I might as well buy a house. So it's really like strangling them.
And not only that, there's a lot of these people, they buy and they have a fixed income. Like they're retirees, they're like in their Social Security, their retirement from their job of, that they work their whole lives. They cannot afford to have such a up-to-stick, price tag in their property. And yes, they do buy condos because they don't have the energy to upkeep the area like of a single family. So they're taking advantage that the association is helping with this. But when the association themselves, this kills me, because it's not like these units are doing a lot of like big yards. It's just the units on the outside, and they don't keep up the money that they charge, because the association here, they charge a lot of money, $500, $700, $900, $1,000, $1,200 per unit. And then you're telling me you have 100-something units and you have no money to renovate?
That's right. But guess what happens too, though? The way that they budget. So there is, for Florida, the state of all the states, there is one state that has a special financing stipulation of how much we can lend, and it's the state of Florida. I'm licensed also in Georgia. In Georgia, someone can buy a condo with 5% down, owner occupied, because in Georgia, most of the condos are what's called Fannie Mae and Freddie Mac approved. Many are not FHA. That's nationwide. And then we can do a special 1 unit approval, and that's going deeper in condos. But in Florida, a lot of people have to put at least 25%, even owner occupied, because when you put 25% down, we don't have to verify all the budgeting that a condo goes through. We just ask for the insurance to make sure they have the right coverage. Which is a whole different conversation with the insurance, but it's the goal of a streamlined condo approval. And Florida, a lot of times, I actually had a few years ago a client who got a down payment assistance and all that. We put conventional. She had the money from that. But I'm like, are you sure what you want? Because again, if you're getting down payment assistance, that means you don't have the extra money. If anything happens, you need to have saved it. And if you're not used to, you're going to, surprise, now have to come out of pocket. That unit had no reserve. And why? Because the board elected to not have reserve. Meaning, usually we want 10% of the budget of expenses to be in the budget, in reserve. The same as you live and you want to have reserve just in case something. Not everybody does. That's true. But you're talking about, like you said, hundreds of homeowners who owned a unit and no funds are placed for that. So that is a Florida situation. I'm not going to say problem, it's just a way. I think it's because a lot of people, snowbirds, mostly on the West Coast or on the coast, right, would elect to have home. It's like, well, if anything happens, we'll pay out of pocket. Because the cost was low, a lot of people actually buy and opt for that option. So it is a problem because people have a hard time paying for the dues and they do have equity in their home. So I want to urge, don't wait until it's too late, where now let's say you have a mortgage, even if it's low, and you got behind because now you got to catch up with all those other things. Start early in the conversation. I've seen so many clients, not condo specific, but people who have equity in their home and they're waiting, because a lot of people have equity because that's the one advantage. One of the advantages of having homes appreciate so much, there's equity. So you have a way of pulling that money without either touching your first mortgage, or if you don't have a mortgage, you can also take that money and help you, during that season of all those expenses. And you say, well, Kristell, you said it's hard to get financing for condos, where there are line of credits that don't review condo units. They don't do condo questionnaires, right? So they would just go ahead and make sure you qualify with your debt to income ratio, you have the credit, and that you also have the amount of equity that's needed to qualify. And that can...
And Kristell, you're talking about a HELOC for condos. That's what you're talking about, that you mentioned earlier. And what I want to reiterate, guys, is that what Kristell is talking about is that it doesn't happen just in condo units. It happens to anybody that's behind their mortgage. It could be a single family home. It could be a townhouse. It could be an apartment complex. It could be a condo. If you have, let's say, a house or an apartment or whatever it is that you have, and you know that it is worth $500,000 and you only owe $100,000, or maybe nothing because you paid it off and you bought it 30 years ago, especially in those condos that are older. You don't have to go through a foreclosure and lose your property when you can pull out the money out of your own property that you've already paid for. And yes, it sucks that you have to kind of pay again for what you've already paid for, but isn't it worse to losing your property that you've already owned and then you're still gonna have to go to another spot? And now we make it harder because you went through a foreclosure. Don't lose your home from an HOA assessment if you really have the means to get a HELOC, which is a home equity line of credit, that you're going to be able to pay it and probably not feel as hard that if you take a hard loan and then you have to pay high interest rates and you have to have a fixed payment on something that might be too high. I don't know. This is just my thought. And if you don't know, then, you can reach out to a lender just like Kristell, and then she'll be able to educate you more into what it is that it takes to do that, because again, it is case by case basis.
Exactly. So we bring information to bring the awareness and really preventing something that's like hard to get back to, like a late payment, because whenever there's a late payment on the mortgage, that's very challenging to get any type of financing. So we want to prevent. So that's what I wanted today, to provide information that may not be already the case for people what they're experiencing, but they're almost at the verge and they're like, sometimes out of pride, we want to hold on. I can almost got this. Start even having information. Know if this is even an option. Even if you start the process, you don't have to pull the trigger until you're ready, but at least you know that as an option for you. I really want people to know that and not have so many clients that I talk to or that I see. It's like, we were right there, but that one late on the mortgage prevented, now they have to wait, or that they don't know and they feel defeated. They feel like, oh my gosh, I'm going to lose my place. Let's help each other find solutions and know that there are options.
No, that's a good point. And then, Kristell, you mentioned something to me about some of the divorces that happens towards the end of the year. And it's not formalized, but the divorce, like they're mentally divorced. And sometimes it has something to do because they struggle with their finances. They struggle with the real estate. It's a job, it's a sickness, whatever it is. I want you to touch on that because if a lot of people don't know, some of the viewers or somebody just finding us for the first time, you are not only a mortgage officer, but you help a lot of divorcees through this process. So what can you tell us about this today?
Yeah. So I'm a certified divorce specialist. So that means I've actually gone through specific trainings to understand and stay in contact. Actually, it was on Tuesday that we had a networking with divorce professionals. And it's like, well, why do you want to be a divorce specialist, Kristell? Well, because I myself went through a divorce and my parents went through a divorce, and housing has always been in the middle of someone's quote unquote dispute of how we're going to split this, what's going to happen. And there are ways of collaboration. There's collaborative divorce, which is more what my teams and my network of professionals like to approach. And it is a law, collaborative law. And then there's more of let's go into litigation, let's go fight for things. Either approach, you want to know where you stand, mostly if you have a home, because if you think you're going to go ahead and sell your house and buy a new one, well, you're almost like a first-time home buyer again, in the sense of like some people relied on their spouse to do the whole process. And although they own a home, they never went through the process themselves to know what's needed. And people say, well, I make money and I'm going to go ahead and pay some child support, but I can still afford. Well, do you really know that? Because that's a new debt, right? When you bought your house, you maybe didn't have any kids and now you have kids and now you're divorced and you have child support. That's the debt I have to count. Or you could be on the other side of the table and say, oh, I'm about to have alimony and child support as income. Right. But how long have you been receiving it? To be able to qualify, there's a time frame that we need to look of you actually receiving, and usually that's 6 months. So if you're thinking, I'm going to sell my house and buy the new house with the child support and alimony, that doesn't happen automatically like that, because there's a time frame that we have to show that that spouse is actually giving you the money. Because if they're not,
can afford to pay you this money, or
exactly,
they're responsible enough.
Responsible, because the court already did the calculations that technically they should. But what if they had a job loss? I had one who it's been years that she's supposed to be receiving. Oh, he lost his job. I'm like, but I can't use it. It's not because you have a court order, you're not receiving it. Or it's not the amount, or it's not consistent. It's 600, but you're getting 400. Maybe I'll use 4. So you want to be in that conversation ahead of time. You say, well, why now in October you want to talk about this when the holidays are coming, Thanksgiving? Well, because a lot of times it may not be on the conversation at the table, but it's in people's mind. And it's like, well, I'm going to wait until go through the holiday season for the sake of the kids, for the sake of all of the seasoning either looking good, which is fine, that's what you want to do, but it's also like keeping the family together. I had a friend, that's what she did. Even after her divorce, they were still coming together as a family. And I honor people who want to, for their kids to still want to have that family. But in the back of your brain, there is a little, well, you know what? I don't want to start another year doing this again. Or, all those, this is not working, like that conversation. So unfortunately, and I'm going to say unfortunately, because I am very, very much pro marriage. Like I do want people to, I want to be married again in the future. So I'm not like, let's get divorced and let's know more about divorce. It's actually more empowering people to know if this is the end and this is now becoming a business transaction, because you have housing, you have income involved. This is emotional, but there is also a business transaction of money, because the person is going to have an impact on that. And how much you're going to be netting from the sale of your house? Are you going to pay capital gain? There's so much that's involved in a divorce. Let's have all the information you need. Speak to experts. Before you even go to a lawyer, the lawyer is going to draft whatever you want them to draft based on what you qualify for based on the law. But they're not going to look at, is that going to really work for you to qualify, right? If you're going to get alimony for 1 year, that's going to be a large amount of money. You may want to split that in 3 years, because now I can use that for income. So before you sign any agreement, before you start scratching your head, I'm going to go about that, find out what's going to help you to make sure that it's going to work for you to qualify. What's your numbers? That's why I say it's almost like a first-time buyer, because now you got to really make sure you qualify with those new debts or with this new income and be ready. Now, January is usually where more filings are taking place, because guess what? We passed the holidays. I've thought about it and I'm done. The holiday didn't go as I planned. The holiday was actually showed me that this is really what I want to do. So people get into their emotion and they just go and file. Well, I'm not encouraging divorce again. I'm only encouraging to get your information, do the numbers before you start signing. So you're not now working with an agreement that you can't qualify with for your next home purchase.
Right. You don't want the people through assumptions. You want them to go based on facts, on what is actually, what they can actually do. And because once you, the truth is, once you own a house, even you're divorced or not, you want to own a house again. And you don't want to go into this divorce thinking that you're going to be able to do one thing, when in fact you're only able to do this or maybe nothing at all. Right. So again, Kristell, thank you so much. Yeah. Do you want to say anything else that maybe do you want to tell our audience that I didn't ask you about or anything like that, or you got everything you wanted to say today?
Well, I want to say thank you. Thank you for giving us a platform as professionals to share information based on our expertise, based on what our knowledge. I've been in the mortgage industry for over 25 years, and even the 203H was something that never really came across, maybe because my lender or the lender I work for did not have that as a program, or it just wasn't really because I was in Georgia most of my life here in the States or doing my licensing. This has come up. So you never know. So yes, we utilize YouTube, we utilize places in Google, and we find information. And I love that you are broadcasting information to the masses, specifically for the Doral community. So I want to thank you for that. And if you want to connect with me, I will be tagged to this podcast, or you can Google me, Kristell Caniquitte. I'll be on Google. I'll also be on all of those social media platforms. Really, my goal as a lender is to share my expertise. I'm not here to dictate which program is going to work best for you. I love to give you information, even if it's like, well, I'm not good with numbers. Well, it's not about being good with the numbers. It's really making sure, okay, what you said resonated and makes sense, so that when I sign, I have peace in my heart that what I'm signing for, or what I'm going through in the 30-year mortgage, I got a grasp of what Kristell shared. I know what I'm signing. If I'm going through a HELOC, which is a variable rate, totally different from an actual 30-year fixed mortgage. I've had clients that it takes time for me to repeat several because they're not used to it. It's like, what? It's variable? So have someone that doesn't just give you a program and then you're like, wait, I didn't know it was variable. Know the facts. Doesn't mean it's wrong. Just know and understand. So you moving forward, I want people to have peace of mind no matter what it is. No matter if the rates are high, no matter what the prices of homes are, whatever direction you take, you're taking it from a position of peace that I'm understanding where I'm moving, and I have someone by my side. So that's who I am. Somebody by the side. I want to help in transforming your pattern of fear into holistic and be empowered and take actions that are best for you.
Right. Excellent. You basically want them to go and take an action, a decision with the eyes wide open. That they know exactly what they're signing for. And guys, this is what you want in your lender. You want a person that not just want to give you a program, a VA, a FHA, a conventional, just the one that works best for you based on your circumstances and your finances. And that because she doesn't want your business just for the one time, right? You want to be able to be a client for life, and then you'll be able to maybe hopefully refer people just as good as you are so that you can also help them as well. Kristell, thank you so much again for coming in, for your grace, for your availability to always say, yes, I want to pour into your community. I myself did not know about the FHA 203H program, which I am pretty sure a lot of people can take advantage of right now. I didn't know that you were into the process of the association assessments yourself. And you also have gone through divorce yourself. So you are a wealth of information and you are a kind-hearted person. Again, my friend, thank you so much for coming on. And I hope to see you in many, many, many more programs. If you guys have any questions for Kristell, you know exactly where to find her. If not, I'm going to leave all of the information of her information in the description below. Thank you for being with me for a whole year in Building Connections Doral Talks. I really appreciate your time. And I hope you continue to connect, ask me questions, come in as a guest. You don't have to be in the real estate industry. You just have to be a member of the Doral community. Again, guys, thank you. Have a good day and have a great weekend. And see you again next week. Bye. Bye, Kristell. Thank you.
Bye.
And thank you for coming in today. Bye, guys. Real quick, calling all Doral professionals, entrepreneurs, and community influencers. Are you ready to showcase your business, share your knowledge and experience with our engaged audience? Building Connections Doral Talks invites you to become a guest speaker on our podcast. Share your unique perspectives and inspiring stories with our listeners. We believe in the power of your voice in shaping that conversations right here in Doral. Click the link below to submit your information and be part of our next episode. Join us in building connections, sharing knowledge, and growing together. Don't miss this opportunity to be a featured guest on Building Connections Doral Talks. Tune in, connect, share, and grow together with Building Connections Doral Talks, reshaping the way we engage with the diverse voices of Doral, one guest at a time. Doral Talks, your voice, our community. Click the link now on the show notes, the screen, or in the comments below, or just scan the QR code to submit your information as a guest. I hope to see you soon. See you in the next podcast. Bye.